Good morning, Jeffrey Friedman, Senior Commodity Broker with RJO Futures, with morning comments on the stock index. I usually have the word of the day, and the word of the day is going to be momentum. I'll explain that in a minute. Little fundamental analysis right now. We had mortgage purchase activity, and it came in weaker than we thought. Even though they're saying that the housing market is improving a little bit and people are underwater or less delinquent than we've seen in 3 years. So on that analysis, we would think that the housing market's getting better. I don't think so by looking at the mortgage purchase activity, which was a negative 1.7. Now, have said that, what else did we have on the docket? We had productivity, which was better than we thought. And you would think, oh, that's pretty good. But usually productivity goes down as the economy swells because we need employment and we need people to do more work, and there's shifting of jobs and upgrading of jobs. So when productivity goes up, that's not, in my opinion, economically sound for the economy. So that, in my opinion, was a negative. Looking at labor costs, that increased, and that's not good because that's an inflationary concept where we have to pay more for the labor units. Now, let's look at technical analysis of the stock market. We'll use the September S&P future contract as our gauge because it is the broad index. We're around 1395. We're a little above, a little below today. Volume is weak. The last 2 or 3 days, the volume has been very weak, almost like we're in summer markets. Oh, we are in summer markets. Oh, very good. Now, when we go higher, the resistance would be 1407, and then, of course, the target for the bulls would be 1421. Obviously, we are in an uptrend. Higher highs, higher lows, higher closes, and of course we're above the 10-day and 20-day moving averages, exponential or simple or weighted. It doesn't matter to me. All of them are looking like the market is going higher. I told you the word of the day is momentum. It looks like we're losing that thrust, the velocity of how fast we can go higher, and that is kind of subsiding. So that would be your first sign that maybe the bulls are starting to give up or possibly want to take a profit. On the way down, if the bears are going to take control, we need for the market to pull back. Normal small pullbacks, 1376, 1375 would be a normal, and the bulls would still be in command. A close under 75 would power us down to our area of 1360. That would be fairly important. A close under 1360, and then the bears are starting to take control of the marketplace in the S&P September contract, and of course you would have a major trend, short-term trend change, in my opinion, classical technical analysis, if we closed under 1345. Seems like a long way off, and it seems like the potential for profits going up to 1421 is less of a distance than the potential for a turnaround and profit taking with so much uncertainty. We did get bad news out of Europe slightly, but they're going to be on the back burner because it is summertime, and really we don't have any real direction. The bulls are in command of the S&P. Remember, always call me, Jeff Friedman, at 800-826-4124, and we can talk about any kind of trading you want, short-term or long-term, fundamental, technical, combination thereof, ags or financials or energies, whatever you'd like to talk about. Remember always, trading futures or option to futures involves risk of loss and is not suitable for everyone. Good luck and good trading.